In this week's episode of the Stockscores Market Minutes, I'm going to talk about trading headline risk, something that's important in this volatile market. I'll then do my regular weekly market analysis. We'll try to determine if there is more to this stock market correction. We'll do a market scan in search of opportunities and look at the trade of the week on CARS. All right, so let's talk about trading headline risk. It seems that in the recent few weeks, we've had big moves in the market driven by a tweet from President Trump or a headline on China-US trade. And it becomes very important to understand how to mitigate the risk of those headline moves. The market is very susceptible to headline risk right now. And so we want to keep a close eye on the actual trading action and look for very abnormal trading action in the S&P 500. So if you are a short-term trader, I like to monitor the 2-minute chart of the S&P 500 ETF, SPY, and look for abnormal moves from predictive chart patterns. However, if you are a longer-term trader, you shouldn't get too caught up in these big short-term moves because they're both up and down, and until the long-term upward trend is broken and we really start to suffer into a major pullback in the market, for the long-term trader to get caught up in these short-term gyrations where the market goes up 400 points and then the next day goes down 500 points and then 2 days later goes up 600 points, all of that kind of cancels itself out. It's only important for the short-term trader. Now let's take a look at a chart of the S&P 500 ETF, and this is Friday's trading action. And at the open, I was favoring buy purchases. I was buying stocks at the open because the market gapped down into support. So typically you would see the market bounce, and it was bouncing quite nicely. However, right here, we had an abnormal move that broke the short-term upward trend line on the 2-minute chart. And that was a signal that something was wrong, that there was probably a headline or a tweet or something like that that got people nervous. And remember that there's computers that are reading news releases and Twitter feeds with algorithms looking for keywords, and they often jump on these things very quickly. And so you don't have to be an algorithm or a computer. You can see that if you're watching the market action. Well, that abnormal trading activity told us that something had gone wrong, and so it was important to exit longs and look for short sell opportunities. And doing that in that first 4 minutes was quite profitable because, of course, the market then continued down through the day as more and more people learned of it. But those who are watching the market very closely using, like I say, a 2-minute chart of the S&P 500, even a 1-minute chart, but you really only want to look for the big moves. Don't look for little blips. You have to look for those abnormal moves with abnormal volume as a signal that something has hit the news wires to drive market trading action. All right, let's get into this week's market analysis, starting us off with the US markets. And this has been a fairly volatile week again. We were pretty quiet through the middle of the week. You can see here, very narrow range trading. We were basically hovering right under resistance, and I was expecting that the market was going to try to break out and move up toward the old highs. But instead what happened is we had that negative news on China-US trade where the US may have, not allow any Chinese imports, which is of course a big deal, and that caused the market to sell off pretty sharply. Now, we have come down to some support. We're almost at that support. We could go down a little farther before we hit that support. And so my expectation is on Monday, we could see a bit of weakness come down to this support zone, and then the market should bounce off of that short term. Now, looking at the longer term chart, we see a little bit more of a problem because this upward trend line that we've been talking about for the last few weeks has actually now been broken. We've closed below that trend line. It's a little tricky because we bounced off of it a few times and we have that support zone that I just showed on the intraday chart. We are still holding that, but I think that some extra caution is warranted this week. We've basically built a falling top, and if we move down through that 282 level on the S&P 500, I think we're then headed for 275, which is the next level of support. And so if you're a short-term trader, you maybe want to favor short selling if that happens. Longer term traders, you might want to tighten stops in some of your longer term positions to protect against some downside. All right, moving along to the small cap market. This is the Russell 2000, and this is the daily chart. And I just want to show how we've had this breakdown from a little flag pattern. So the market started to move lower at the beginning of August. We rose up for a few days and then we broke down on Friday with some pretty strong volume. That's a pretty good signal that this market wants to go lower. Now again, we're right at some support here, so we really haven't broken it yet. And I'll give it a chance to try and bounce back early next week. But if it doesn't, if we start to move down through this, we could be gathering downside momentum, and traders will want to be careful with positions that are owned and look for short selling opportunities, or look to trade some of those inverse ETFs that go up when the market goes down. On to the Canadian markets. TSX also suffered on Friday, but it too has support that is protecting against downside. Again, we could go down a little bit more early next week before we bounce off of that support level, but I do expect that we will bounce back in the short term. Looking out a few days, though, we may ultimately break down through that support. That is something to watch for next week. Looking at the longer term chart, you can see that we still are in this sideways trading range, but notice that there is a little bit of a falling top to that pattern, and that is an indication that pessimism starting to build. If we see the TSX break down through that $24 level on the XIU ETF, we probably are going to see more weakness. So we want to watch for that closely. It could happen next week. It could happen in 4 weeks. It might never happen. But that's the line in the sand that you want to keep an eye on, that $24 level. TSX Venture had a pretty rough week 2 weeks ago, and then sort of bouncing back a little bit this past week, but still not a very optimistic looking chart, so I would be very careful with long positions on the TSX Venture. Of course, an individual stock can do well if they have something good happening, but generally speaking, this market is in the summer stage and it typically kind of bottoms out in October, so you want to sort of be patient, wait for that downward trend line to be broken. On to currencies. The US dollar was strong early in the week and then it fell late in the week, but still in the context of that long-term upward trend, we're still healthy. The US dollar is the place to be for currencies. Canadian dollar has been moving lower the last little while after breaking the downward trend line. I think we may see it bounce soon. We're starting to see the momentum on the pullback start to slow down. We've got this rising bottom pattern here, so we could go down for another week or two, but I wouldn't be surprised if the Canadian dollar gets a little bit of support and starts to move up again. Wait for it to happen, but it is showing signs that it will start to work on that recovery from the downward trend soon. On to interest rates. And of course, if the bond market is going up, interest rates are going down. The bond market is in a parabolic trend, which means it's a little bit emotional as people look for safety. If the stock market stabilizes, I expect that we'll see the bond market pull back. If we think about the linear trend line, that's quite a distance that we are above it. And we have a rule in chart analysis, when price runs away from the linear trend line, it usually comes back to it. Don't see any weakness in the bond market yet, but that would be something I would expect to see in the next few weeks. On to commodities. And gold continues to be a rock star. It, of course, broke out a few months ago there and has been moving higher ever since. I don't feel great about initiating positions in gold stocks because this trend is now 2.5 months old, 3 months old. But if you own these stocks, there's maybe some opportunity to add to your positions to increase the upside potential if the trend continues. Oil continues to suffer. If we draw our downward trend line and our upward trend line, you can see we're still in that pointy part of this pennant pattern. If we were to break down through the bottom of this, that would be bearish and probably head us toward that level. If we can break to the upside, then we maybe start the recovery getting back to the highs of last winter. And finally, the fear chart. Of course, the VXX goes up when there's volatility, and we've seen it elevated the last few weeks, and on Friday it took another spike higher with some volume, but it is still below that resistance level. So I don't think it's a real strong signal of fear, but it is something to keep a note of as investors are showing some nervousness after the sell-off on Friday. So my ratings then, I have switched my long-term rating on US stocks to bearish. I don't like that break of the weekly upward trend line from a falling top. I'm neutral short-term because I do think the market will bounce back in the short term in the next couple of days. But still, we have to be careful longer term. Canadian stocks neutral on both time frames, stuck in that sideways range. Gold remains bullish on both time frames. Oil, neutral long-term and bearish short-term. I forgot to write in my comments, but essentially I think everyone needs to be a little bit careful as the volatility from the headlines that are coming out is making the market pretty nervous. It's hard to want to be a buyer when you look over your shoulder that maybe Trump is going to put out a tweet, and that could move the market quickly. All right, let's do a Stockscores market scan and see if there's any opportunities despite the market weakness on Friday. So I'm going to run the abnormal breaks US scan. This looks for stocks making abnormal gains with abnormal volume, and we'll then inspect the charts to see if they have good chart patterns. So this first one is a gold stock, and this is a continuation pattern. So earlier in this presentation, I talked about how maybe there's an opportunity to scale into some of these gold names. And so what happened here is we've got what's called a flag pattern. We have an upward trend, we pulled back in the flag, and we broke the flag. And that's a good signal that this market will continue higher. So if you bought this, say on the cup and handle breakout back in the middle of July, this would maybe be a signal to add to your position, raise your stops up to that 320 level, and hopefully enjoy more upside with a bigger position because of your scaling. And we can see as we go through this, there's that pattern in a lot of these precious metal stocks. Here's a silver miner, very similar pattern. Here's another silver miner. Again, we're in a strong upward trend. We pulled back for a little bit, and then we've broken that pullback. That should perpetuate that upward trend. That's same pattern. There's another, that's a gold ETF. Here's another gold ETF. So notice all of the strength is basically in precious metals as investors sought safety. Here is an inverse ETF for the Russell 2000. So I showed you earlier the breakdown on IWM. This ETF goes up when the Russell 2000 goes down, and it's made a little bit of a break. It's still below this resistance level, so it's not quite perfect. But if you want to, potentially play more of a correction in those small cap stocks, this is one way to do that. RWM goes up when those small caps goes down. Another gold ETF, and it looks like that's about it. So basically precious metals and an inverse on the small cap ETF. All right, let's get into the day trade of the week. And on Friday, when the market broke down, it broke down around 11, we saw a whole bunch of stocks start to trigger short sell signals. And of course, it's easy to make money from markets going down. You just short sell the stocks. The only caveat on it being easy is that sometimes you can't get inventory from your broker, but there's enough stocks out there to play in these pullbacks. And so this is an example of a stock that was in a descending triangle. This is the 2-minute chart on Friday. And right around 11 o'clock, just after 11, you see that spike in volume and the breakdown. The fact that there's a little gray dot there tells us that that is a bearish action candle. And so that is our cue to take the trade. If you're watching my active live service, this symbol was one of the symbols that came up at that moment, telling us that there was some abnormal selling pressure in the stock. And we just jump on. We're not being leaders. We're following the smart money, following those computers, those algorithms, and jumping on the weakness before the crowd, but essentially one step behind the most savvy computerized trading algorithms. In this case, for $100 of risk, it required a position size of 1,420 shares, which is $12,269 of capital. But of course, you can leverage it 3-to-1. So that means that your capital required with margin is $4,090. This trade ended the day at a 5.1 risk-reward ratio, which means for $100 of risk, that is a $510 gain. If you had $1,000 of risk, it would be a $5,100 gain. Either way, a 12.4% return on a trade that lasted less than a day. This is the power of day trading when you have the algorithms that can identify this abnormal trading activity early. And that's, again, something we do with Active Live every day. If you want more information, go to the Stockscores website. There's some information in there. Well, that has been the Stockscores Market Minutes for August 26, 2019. Some good volatility, so make sure you stay tuned here. I'll keep updating you each week. Have a great week in the market. Hit the like button, subscribe to the channel, and most importantly, trade well.